Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman with Great Lakes Investment Advisors. I have two awesome guests with me today, as my listeners and viewers are used to. My awesome co-host, Mr. Tony Shore from the great state of Minnesota over there in the Minneapolis area. But Tony has been able to really pull some strings out there this time, listeners and viewers. I don't know how he's done it. I don't know how I've done it, but we have an awesome special guest with us today. Those of you that have been longtime listeners and viewers, you obviously recognize the name Gradient Investments. That's our third-party fiduciary wealth manager. They manage money for our families that we serve. We've had portfolio managers from Gradient on the show before, but today we've stepped it up a notch. So, Tony, thank you for pulling some strings. I guess I was able to pull some strings for us as well.
It was all you, Jason.
I don't know about all me,
you.
I don't know. You kind of have an inside line there with Gradient being an employee of, but nonetheless, I'd like to, obviously, Tony, you and I are going to catch up on life and our weeks past like we always do on the shows. But before we do that, let's please introduce probably the biggest, best, most important guest I've ever had on this show, Mr. Mike Binger. Mr. Mike Binger is the president of Gradient Investments. So, Mike, welcome to the show, my man. Thanks for joining us today.
Oh, well, I don't even know how to respond to that warm welcome here. That's you're making such a high bar to hurdle there, but no, I'm excited to be for the first time on your show here. This is awesome. So after this, I hope I do well enough that you bring me back sometime.
Well, I think you probably will. I think you'll be invited back. Appreciate you being here. We're going to dive in throughout the show for all of our listeners and viewers. We're going to dive right into Mike Binger, the president of Gradient Investments. We're going to get right deep into a lot of analytics and statistics and stock market and maybe some of the election and with Trump being president. We're going to dive into a lot of awesome, good stuff today and some of the gory details of the stock market. But before we do that, let's step back and just, I want to have Tony, let's talk about you and me a little bit. How's the family? How's everything going over there in Minnesota?
Well, great. A week or so ago, we had Thanksgiving a week and a half ago, and I basically had 3 Thanksgivings over a 4-day period, all with turkey, mashed potatoes, gravy, stuffing. So I just want to go on record as saying, I believe I ate my own weight in mashed potatoes. Yeah, that's probably not a good thing, but it was a great Thanksgiving, great to spend time with family, and just been doing good, just really busy. Jason, now I know this is a busy time of year for you, right?
That's great. Well, Tony, you know
it.
Yeah, I mean, and all of our listeners and viewers know, I don't know if there's a time of year that's slow for me. Obviously, professionally within my business, I'm always busy, but especially with the kids and the family. Everybody knows we have the 3 kids, Lexi, Josie, and Carson. This time of year is awesome. It's exciting with the holidays. We had some awesome Thanksgivings as well with our families. I do believe last week on our show, Tony, it's probably recorded twice on the record now, because I do believe last week on the show, you also stated that you believe you ate your weight in mashed potatoes. So it's double documented. You're never going to live that one down now.
I already mentioned that, huh? Well,
you did.
Yeah, I still feel it. I'm going to have to diet for a year. It's a motivation though for my New Year's resolutions.
There you go.
But let's ask our special guest, Mike Binger. Now, Michael, you make constant appearances on Fox Business. You've been on a lot of different channels talking about the investment world and the markets. But how are you doing personally? You've been busy. Did you get a chance to spend some time with family?
Yeah, I mean, just like you guys, we're always busy at Gradient Investments here. This has been a particularly gratifying year. I mean, a lot of, we've had markets and interest rates and inflation rates coming down, a lot of things cooperating for us. But I have 3 children, and they were all, one lives in Minneapolis where I live, but 2 of them live elsewhere. My daughter lives in San Francisco, and my son lives in Tampa, Florida. So they were all here for Thanksgiving.
Wow.
We had a big group. Yeah. So it was really fun. As my kids get a little older, as they spread throughout the country, I mean, it's harder to get them all together at one time. So it was really fun, and we just enjoyed ourselves over the Thanksgiving long weekend. And it was great.
Yeah, same for me. I have 3 kids, and now that they're older, it's getting harder. One's out of college and married, but it is nice when they can all make it home, and that happened for us too. Of course, Jason, you're the young pup here. Your kids are still all at home, so.
Yeah, I don't know if I'm the young pup. I guess probably on this show I am, but my wife and I both just hit 50 years old this past summer. So, compared to a lot of our friends that are 50, their children are a lot older, and they're like in the position of you guys, where the children are either in college or are already married or off on their own. Where we got a little late start, my wife and I, and our kids are 17, 14, and 11. It's a crazy, fun, awesome, busy time because they're also busy in cheerleading and track and band and gymnastics and football and baseball and you just name it. It's a busy life we live, but it's fun. We wouldn't have it any other way.
You're in the divide and conquer stage of your life, aren't you?
We really are. It's funny you mentioned that, Mike. So divide and conquer was really a problem potentially when Lexi wasn't driving yet, our oldest, because then we had 3 kids to be 3 different places, but mom and dad, there's only 2 of us. So generally there was one kid that was either left out or, hey, you got to find a ride. Right. Yep. But now it's I guess kind of the bittersweet thing when your children get older and they start to drive. It's scary and that my baby girl's on the road driving, but it's also a convenience factor that, hey, she can take care of herself. Now the other 2, mom and dad can get the other 2. And matter of fact, Lexi helps out a lot by giving them rides. So it works out great. It works out really good.
Yeah, well, it's like my good friend always told me, when you go from 2 to 3 kids, you have to switch from man on man to zone defense, and it becomes a lot. It becomes a lot trickier.
Yeah, and a lot of times with man on man, it's tighter coverage, right? Zone defense, they can tend to find holes in the defense.
Yeah.
Same thing when you have 3 kids and 2 parents, there's going to be a hole somewhere to fill, and we've done a pretty good job at that, though. But yeah, it's been a busy, crazy, exciting year. Mike, you hit the nail right on the head when you said, there's been a lot of things lining up for investors and for portfolios this year. Pretty darn good. We've had a stock market that's been on a 2-year rally. I know you're going to jump in and talk about that quite a bit for our investors. Like, why? What the heck was going on in the market in the last 2 years? We've had inflation that's coming down from what it was 2 years ago, which that's kind of a positive thing. We've had interest rates coming down as well, which can be a positive thing when we're borrowing money. But I know you'll touch on that a little bit, the 2 sides of interest rates when they go up and down, and borrowing money and investing money. Politically, it was a crazy year. I tell you what, between the 3 of us, and I've expressed this to everybody I've seen, even in the grocery store since November, I'm happy it's over, right? I mean, the election is done. It's over. And I think the market, you hopefully be able to chime in on some of this as well, Mike, that I know we've had Jeremy Bryant on the show before. We've had Tyler Ellegard on the show before. We've had Keith on the show before. And all 3 of them would kind of echo the same thing, that the stock market doesn't really care about politics. It doesn't care about Republican, Democrat. The stock market doesn't like uncertainty. And obviously before the election, we had a lot of uncertainty. Right. What the market likes is confidence and certainty and knowing what's it going to look like moving forward. So I think you're going to give us kind of a better idea today on what might it look like moving forward politically, and how how maybe the future politics could impact portfolios in the stock market. So before we take our first break, tell us, Mike, just tell us a little bit more about you, I guess, personally. Yeah. Tell us more professionally about your resume, so to speak. Bring us up to where you are sitting here today at Gradient. Then we'll probably take our first break and we'll jump right in.
Yeah, good. So I too live in Minneapolis, Minnesota here. I was born and raised here. I went
we definitely won't hold that against you. I don't hold it against you too often. So.
I'm a giant Minnesota Vikings fan. So I'm really looking forward to a end of the year, the last game of the season, a face-off versus the Detroit Lions. So
oh my gosh, wouldn't that be something?
Oh my goodness! So we'll see how.
Tony, I think I just heard Bayer say he's buying tickets. So
yeah, there you go. There you go. Yes, I like that.
I mean, so I'm a big sports fan. I've been married, close to 30 years now. My kids are grown there. My advice to, I'm actually a little bit older than you, Jason. So my advice would be enjoy it while it lasts, because it goes by awful quick.
Why does it ever?
But I started my investment career way back in 1987 for a company called Lutheran Brotherhood based here in Minneapolis. The company did an acquisition in the early 2000s. It's now called Thrivent, and a lot of people are familiar with Thrivent, especially around here as well. Yeah. But I was in there. I started in their investment department. I was a portfolio manager for many years there. I came to Gradient about 12 years ago. And it was a small company when I came here. We've gotten a lot bigger here. We manage close to $7 billion in AUM around the country. We work with, roughly 400 advisors. By the way, Jason, congratulations. We have 400 advisors. You're a top 20 advisor with us. So you've had a lot of success.
Wonderful. Thank you. And I thank you and the team at Gradient for that.
Yeah. And I always say that success doesn't happen by accident. I mean, it's by, providing good financial services products, but more it's about doing the right thing, listening to your clients and doing the right thing for them over time. So, so congratulations on your success. But I've enjoyed my 12 years here at Gradient Investments. It's just been a lot of fun. We have a real growth culture, but we too are interested in providing good investment portfolios for advisors, clients to invest in, providing great service, but more importantly, helping the people that we work with reach their long-term financial objectives. And at the end of the day, that's what it's really all about. And I think, just like your success, our success, when I came here, we were at $200 million. And today we're at $7 billion in assets under management.
What a growth rate. Congratulations to you guys.
Thank you. So I think that speaks for itself. And, it's very gratifying to me because it tells us that we are helping advisors. Thus, we're helping clients. And it's all about the clients at the end of the day.
Yeah,
Absolutely.
That's huge.
So what does a day in the trenches look like for the president of Great Way? Like we've had a couple of the portfolio managers on. We know what they do. And I've heard from them what they say you do or don't do from what they say. But tell us, what's a day in the trenches of Mike Binger look like as president of Great Investments?
So I have most of my career, I was a portfolio manager, which means you're selecting stocks and deciding what sector weightings, this much in technology sector, that much, or whatever it may be.
Yeah.
When I took over the presidency about 7 years ago of Gradient Investments, my job a little bit transitioned. Now it has to do a lot with people management to, making sure our systems and processes at Gradient Investments are good. Managing, we have not only investment management team here, but we, have 25 people who serve in, our operational department. We have 6 traders. We have a compliance department. We have a lot of, investment consultants here that work, day to day with folks like you, Jason. So it turns into, kind of a operational at the end of the day means people management. So there's a lot of that now, but I'm still, I keep extremely close tabs on the market. I watch it every day. I look at a lot of stocks. I'm an investor for myself, and I still, that's still my passion deep down is, where markets are going, what's the economy is doing, all those investment things.
Sure. Yeah.
But I've transitioned a bit over the years from investing to people management for an investment company.
Wow. And what an impressive resume that you've got, Mike. And so much experience. And I know that experience lends itself well to helping your clients, Jason. And for our listeners, they can experience that too. They just need to pick up the phone, give you a call, set up a consultation. So before we go on, really quick, we're going to give away 10 copies of Jason, your book, Empower Your Retirement, it's called. Listeners, it's chock full of great information, talks about markets and volatility and investing and retirement planning. It covers the gamut. So we want to give away a few of those to the next 10 people to call the office and request those. That number is 989-835-7203. Again, that's 989-835-7203. Or they can just go check out your website and set up a consultation. There's no charge or obligation. That's GreatLakesInvestmentAdvisors.com. Again, GreatLakesInvestmentAdvisors.com. All right, we're going to continue with your Financial Empower Hour. Jason, we've got the greatest guest you've ever lined up for the show, Mr. Mike Binger, the president of Gradient Investments. Jason, I know you have some questions for Mike. Where do you want to start?
Yeah, we got some awesome questions. So I for the last couple of weeks here, as we're leading up to this show, I've been letting a lot of the families that we serve, a lot of our clients, I've been letting them know who I'm going to have on my show. And last month we did a State of the Economy market update post-election that was here in town. We had about 150 of the clients we served there, and we had 2 of the portfolio managers from Gradient there. I let them know that night that I was also going to have the president, the man, Mike Binger, of Gradient Investments on my show. So I've been kind of getting my clients to throw some questions at me of not what I wanted to hear the answers to, but these are questions, Tony and Mike, that come directly from the trenches, so to speak, and from people that are really wanting to know. So I'm going to come out firing. We'll go some rapid fire. I'll throw some at you. I might cut you off once in a while, but hey, let's jump right in. Amazing year of 2024. Mm-hmm. What surprised you most this year?
Yeah, well, a few things surprised me. Number one, just the strength of the market of the S&P 500 this year in the U.S. I mean, we had a 25% plus year in 2023. Mm-hmm. No one really expected that to be repeated in 2024. It has been. I mean, we're not over. We got a couple weeks to go, but we are there. So I just think the strength of the returns have, and driving that are a few things that kind of surprised me. So we've heard a lot about artificial intelligence, right?
That's about all you hear about now, right? I mean, you can't hardly not hear about
it. At the beginning of the year, it was more of a concept. And today, I think it's getting broad implementation. And almost everyone realizes that, look, artificial intelligence, it's not going to take my job. In fact, if I don't use it, I may lose my job.
Correct. So it's real. Mm-hmm.
Yes, it's real and it's happening. And, just that theme has powered, probably I'm going to say 10 to 15 stocks that have really led the market this year. Those are in the technology sector, and that's where you would expect the first adoption and, and the implementation and actually the generation of AI products for the broader consumer and business base to use. So the inflection point happened this year, in my opinion, in artificial intelligence. That was a little bit of a surprise. The strength of what we're going to call the Magnificent Seven stocks, led by a company called NVIDIA, which probably a year and a half ago, not many people have heard of, but now almost everyone knows NVIDIA, that they're the maker of, by far and away the leader in the artificial intelligence chip industry. And then other thing that kind of surprised me this year was Bitcoin just today topped $100,000. So there's something going on here.
There's something going on there. I want to just real quick, and we talked about this. Tyler Ellegard did a great job at my client event last month when he did the Q&A, and a lot of questions popped up about Bitcoin. And something you just said about AI, Mike, was AI is real. It's here. Mm-hmm. Questions I have, and a lot of my clients have about Bitcoin is, what the heck is it? Is it real? What is it? Is it here? And what is it going to do? Is it going to change the dollar, our financial system? So we don't have to. We can do a whole show just on Bitcoin. Yeah, we can. I just want to make that comment. It's crazy.
Yeah. It is, but I think the biggest driver of what's driven it from below 50 to above 100,000 is that Bitcoin now. Investors, before you would have to go out to your phone and get this app called I can't remember what it is, Robinhood or whatever. Mm-hmm. You couldn't really invest in it easily, and you had to invest in it in kind of these more obscure apps and websites and companies. But now the SEC has kind of deregulated the Bitcoin ETF industry, where all these companies have brought to market Bitcoin ETFs. So that is vastly increased the demand for these ETFs, which in turn increased the demand for Bitcoin. And I think that's played a big part. And the new administration has, the chairman of the SEC currently has now said he will step down. The new administration has appointed a new chairman of the SEC, and this chairman is pro-Bitcoin. So, could we see more strength here? Yes. I tend to be a little bit more old school and skeptical when things like this crop up. Yeah. That's why I don't manage our digital discovery portfolio. And that's why a guy like Tyler Ellegard, who's younger and more open-minded to new concepts and things like that, he's done a great job. It was up, over 100% last year. It's up about 75% this year. So he's really done well there. And, that's part of my job, is matching portfolio managers to portfolios that they're mindset and the way they do things is best suited for.
Yeah. Awesome. So you mentioned a couple of things there before our next break. I want to touch on, or have you touch on, is you mentioned that recently, the SEC has deregulated a little bit, I think were your words, the Bitcoin ETF industry. Then you mentioned incoming,
SEC chairman.
we had the SEC chairman being pro Bitcoin, President Trump being a little more less regulation for some aspects of the market and growth, and somebody now that's on Trump's team of Elon Musk that could have a lot to do with AI, Bitcoin. So we don't just have to focus on Bitcoin, but what do you think of the new chairman of the SEC, the President Trump with maybe less regulations, and this Elon Musk thing? What do you see that all doing to the market?
Yeah. So without getting too political here, I do think that the new administration, that most investors would think the new administration is more pro-business. Okay.
Sure.
Less government, less business / consumers.
Sure.
I think, we had a pretty big thing that's coming up next year with the, as you recall, I don't know, 4 or 5 years ago, the Tax Cut and Jobs Act.
Yeah, 2017.
Lowered corporate income tax rates.
Yep.
That was set to expire in 2025. My opinion is now with the new, that will continue and corporate tax rates will stay where they are versus go higher, which puts more money in their pockets to hire and invest in all those kind of things.
Absolutely,
increase, maintain profit margins, which affects the stock market and all that kind of stuff. Definitely a rollback of a lot of regulation. And look, there's frankly, we're in the financial services business, and there's just, in my opinion, a lot of unnecessary regulation in the industry. And there probably is, like that in other industries that I'm not familiar with.
Yeah.
And I mean, Trump has said for every regulation I install, I'm going to, take 10 away. I mean, that's probably a little dramatic in my opinion, but it's definitely let's roll back some of these unnecessary regulations. So in general, I believe that just some of the policies in the new administration are going to be more pro-business. So government won't be getting in the way of a strong economic and market cycle that's already in place.
Yeah. That's huge. Well, and another great point, obviously things are changing with the new administration. I know we're going to talk a little bit more about what's going to be going on next year and get Michael's thoughts on that. But we do want to take another quick break here to let our listeners know that they can get a copy of your book, Empower Your Retirement. There's no charge. You'll ship it for no charge. It's great. Do that. Be one of the next 10 callers at 989-835-7203. That's 989-835-7203. Or they can set up a consultation by calling or go to the website, GreatLakesInvestmentAdvisors.com. And now we're going to go back to your Financial Empower Hour.
Welcome back. We have an awesome guest on the show today. It just blows my mind every time I have the opportunity to talk to one of the portfolio managers or now the president of Grady Investments. The insight they have to the markets and the economies and what's going on in the world around us. And that's really why we've entrusted in Grady Investments and their team for over 15 years now to help us manage money for the most successful families we manage money for. So Mike, let's jump right in. I want to ask you in this segment, I want to touch on, we're going to talk about some tailwinds of the market this coming year, some potential headwinds of the market this coming year. And then I want to wrap the show up either in this segment or our final segment on what exactly is Gradient Investments outlook and what are they doing based on the potential tailwinds and potential headwinds we're seeing that we could be seeing into 2025 and moving on. So let's start with the trends or themes, the tailwinds you think are going to dominate the markets going into 2025.
Okay. Well, let me ask you and Tony a question. I mean, as you look out there, what's not going well right now?
Everything's going pretty good.
Yeah, the economy's great.
Yeah. I mean, we at Great Investments, we really focus on what we call the fundamentals when analyzing the market and frankly, individual companies too that we invest in. And those include, the health of the economy. Secondly, includes the profit and loss trajectory of corporate America, the companies we invest in, and finally, its valuation. Okay. So let's start with the economy. I mean, things are good. I mean, the most anticipated recession that's supposed to happen that we've been waiting for several years hasn't happened. I think the Fed has done a masterful job in controlling inflation by raising interest rates and not sending us into a recession.
Right.
In fact, I see the economy now accelerating a little bit into kind of this more 3% plus GDP range, which is very good for the stock market. I mean, you look at it and, unemployment levels are still very low. Economic growth is strong. Regulation and those kind of things are probably going to be rolled back. Corporate taxes will stay lower. I mean, so the economic backdrop is really good right now. And let's just throw in inflation. I mean, inflation is very controlled right now. It's underneath 3%. And that's a long way from when it was 9%.
Yep. Not very long ago.
Yeah. So in my opinion, the economy is strong, has been strong, and will continue to be strong into 2025. So now let's look at corporate profits. How is corporate America doing in this healthy economy? And frankly, they're doing quite well. We look at profit growth. Investors want to get into companies that are growing, right? I mean, because if a company's growing, that means their stock price will fall.
That's where you have the highest returns, right?
Yes. And kind of when you think of the US market, you think of the S&P 500, it's the broadest index out there. And kind of a long-term average for earnings growth of the S&P 500 collective 500 companies is around 7, maybe 8%. Well, this year it's going to be north of 10%. And next year, the forecasts are for 15%. So think about that.
Wow.
We have a good economy, and we have corporate America and the companies that we invest in, their earnings are flourishing and growing at almost twice their long-term average rate. And then the final piece of the puzzle, by the way, so corporate profit growth is very good, and we anticipate it strengthening. And now we kind of have the perception that the government's not going to get in the way of that. In fact, they may stand back a little bit and let corporate America flourish more. And then finally, it's valuation. And look, just like we said, we've had back-to-back years of 25% plus, which means stocks have gone up a lot, and they're probably more on the expensive side. But I'll tell you what, if the economy continues to do well and corporate profit growth continues to grow strongly, valuation works itself out in the long run, and the stock market will grind higher.
Sure. Yeah. So those are some awesome tailwinds. And I think, keeping it, I'll dumb it down to me. So the consumer is healthy.
Yep.
Consumers healthy and spending money. Corporations are healthy and making money. That really leads to an overall inflation is under control. Interest rates are reasonable. That really makes for an overall pretty damn good equation for a healthy economy.
Yeah. And generally the playbook, Jason, the playbook generally says that when inflation gets out of control, you have to bring it down, and you do so by raising interest rates to choke out the economy, which can lead into a recession.
Right.
If you do that, inflation was out of control. The Fed did raise interest rates quickly, but they raised them from levels that were artificially low, almost, all of us remember what we used to earn on our
we were zero or sub-zero.
Zero. Yeah. So we raised them from artificially low to more normal levels. Okay. And unemployment rates stayed very low. Yeah. So I feel like the fact that, we're really in a labor shortage in this country right now. So the fact that unemployment has stayed around the 4% level and that interest rates were just normalized. We didn't take them from 5% to 10%. We took them from 0 to 5. I think those two effects really saved the economy, kept us growing, and will continue to do so next year.
Good. Well, yeah, those are some awesome tailwinds. So let's shift gears. Let's flip that coin, Mike. And now let's talk about some of the headwinds, what coming into 2025, whether it be politically or internationally. There's a lot going on out there. So tell us about maybe the top 2 or 3 headwinds you see at Grady Investments that we as investors face and the market faces into 2025.
Yeah. So there's a few of them. I mean, look, there's always things you have to be concerned about. I mean,
sure,
I've been doing this,
absolutely,
for 35 years plus now, and there's never been a year where we haven't been concerned about anything, right? But as we look into 2025, kind of the first thing is, we see a strong economy, and strong economies could maybe get inflation going again higher. So we'll worry about the reemergence of higher inflation rates.
Okay.
We've had a lot of global hotspots around the country, around the world in the last couple of years. I feel those could maybe get a little better, but one that does kind of concern me a little bit is, what's going on over in the Middle East between Israel. I don't think the skirmishes between Israel and Hamas or Hezbollah is really going to affect U.S. markets. But what if it broadens out and it goes between Israel and Iran, and it affects the flow of oil? Sure. And we get a spike in oil prices, and that will reaccelerate inflation. Because when you think about it, oil it's an input cost in almost everything around the globe.
Absolutely.
So if that goes higher, prices go higher, inflation comes back. So we worry about that and what the implications of, more escalation there could be. And then finally, I look out to China. China's in a hard spot right now. I mean, their economy is kind of a mess. They're certainly in a recession, and the government you're seeing is trying to, provide stimulus like we did back in the pandemic era to try and stimulate their economy back. I don't know if they're going to have a lot of success with that and those kind of things, but China is the number 2 economy in the world behind the U.S. So we need to watch that, right? Because what happens there will affect us. And then finally, the administration is pro-business, but tariffs are not pro-growth. I mean, tariffs tend to put a dampen on economic growth. Now, personally, I think the administration is using the tariff talk to posture for some of the things they want to accomplish with the countries that they're doing this with.
Sure.
So I think it's more posturing than they're actually going to implement these very large tariffs. But I mean, if it gets to that, it will raise prices in certain sectors. It will, it could reignite inflation again, and it's something to watch if we actually implement those.
Yeah, tariffs a big talk right now, and I've had a lot of discussions with some of my clients recently, and I kind of use the same terms. I think it's posturing, or I think it's in any terms of negotiation. You always say, okay, if at the end of the day, for example, Mike, if I want $50 from you, I'm gonna demand you give me $100, and you're gonna say 25. We're gonna meet in the middle somewhere, right? So it's that plan of negotiation and posturing. And so I think what we're seeing here right now might be puffing up the chest, posturing, saying, I'm going to throw out all this max, knowing that really at the end of the day, they're going to meet somewhere in the middle. Hopefully that's how it goes. I think that'd be the easiest on our economy. And I do think we have to pay attention to, as tariffs come in, it could definitely be an increase in prices. It could definitely be an increase in inflation. I think it's a question of the severity of how steep could it raise inflation prices, and how long, the sustainability of it. Will it be a long-term effect that could have more impacts, I think, or lead to more of a recession, versus if it's a little short-term effect, a little blip on the radar screen, those things, I think, especially with as healthy as our economy is today, we can get through those a lot easier. Would you agree?
I would absolutely agree. When you talk about posturing, I mean, look, the U.S. imports a ton of stuff from China. And
there's no doubt about it. You can't get away from it.
Yeah. We as U.S. consumers like to buy cheap stuff, and China makes cheap stuff. And it's been that way for a long time. Our economies depend on each other. I think what administrations and the implementations of tariff against them are concerned about more is kind of national security issues, things like that. The flow of drugs coming out of China into the U.S. I mean, I think there's posturing going on there, and of course we're concerned about the China-Taiwan situation. Taiwan is a really the global leader in semiconductor chips, and we need to be wary of that, because everything in our lives is dominated by semiconductor chips. With the Canadian, the Mexican borders, I think there will be. I think it's kind of remote that we're going to put severe tariffs on those countries, because they're our partners, and North America is pretty seamless now and integrated. So I mean, that's just, I'm a believer in immigration. We need it. We need more people to grow the economy at 3% plus rates, but I'm in favor of legal and controlled immigration. And instead of blocking immigration, let's figure out a way to regulate it and control it better. That's where we should be spending our money. Because look, if you want the economy to grow, you need You need people and capital,
Absolutely.
and that's what makes things grow and become more
Yeah.
productive and all that. So we'll see where all this flows, but at the end of the day, we're still constructive because we see a very healthy economy in the U.S. and we see a very resilient and profitable corporate America, which is the companies that are in our portfolios that are doing quite well.
Mhm.
Yeah. And that's huge. And I would agree with you on immigration. We hear the talking heads on both sides of the extremes, like we're going to ship everybody out, no more immigration.
Yeah.
And then that's one side. And then the other side is let everybody in, everybody who comes in stays, they get lots of benefits. So, hopefully they will meet somewhere in the middle, Mike. I think you're right. Now we have to take another quick break. This is our last break, and we'll come back and wrap up the show here with Mike Binger about the economy and the markets out there. But let's give away a few more copies of the book. And this time, if you have questions about your portfolio or your investments or your overall financial plan or retirement plan, Jason and his team there, along with Mike Binger at Gradient Investments, and that team can really help you out. All you have to do is pick up the phone and call 989-835-7203. And Jason loves to hear from listeners and viewers out there. Again, that's 989-835-7203. All right, guys, we got about 4 minutes left in the show. Jason, is there anything else we want to ask Mr. Binger today?
Yeah, I think it's a great time for the hot seat. I put Jeremy Bryan on the hot seat maybe a month ago when he was a guest on the show. I think Tony let us into the last segment, said we got 3 minutes go. And so I said, okay, Jeremy, hot seat, 3 minutes go. Mr. Mike Binger, president of Gradient Investments. Again, thank you so much for everything you and your team have done for me and the families we serve. Thank you for being a guest on my show today. I want you to finish strong. I'm going to just ask you for the last 3.5 minutes here. The show's all yours. How does Gradient adjust your strategies and your management of money, and how do you navigate the team in the current market and future potential market conditions?
Yep. So part of our, each of our portfolios have a specific set of objectives, long-term goals, that kind of thing. And that's why we have 30 different portfolio models. And it's my job to really match up, the portfolio managers with the portfolios that they manage to make sure that, okay, this portfolio manager is more of a value guy and dividends and all that. So let's put him managing the G50. Keith, he's more of a growth oriented manager. Let's put him in our G33 and our core select portfolios. So we do that. So first off, I do that to match portfolio managers, according to what the best objectives are for each individual portfolio.
Yeah, it makes sense.
Yeah. Secondly, inside these portfolios, as the portfolio managers are, picking stocks and overweighting or underweighting sectors in the economy, that's what's called active management. And that's what that's our jobs here. And that's what we're doing, 24/7. Our people are continuously analyzing the economy, looking at individual companies, earnings reports, analyzing industry trends and sectors. That's what they do, and they're successful at it. But they, adjust sector weightings, and they, not all companies in the economy do well at the same time. So if companies start to deteriorate, they sell that and they buy one that they see where there's an acceleration, that kind of thing.
Sure.
So that's what they do. They, they over and underweight. They're buying and selling different stocks of companies, and that's called active management, and that's what we do, and that's why our partnership works out so well. Because you don't have time, Jason, to spend 24/7 in the markets. We do, and that's why we partner.
Yeah, that's awesome. So just to tee that up, is customized portfolio managers with the portfolio management philosophy. You can't have somebody who's great in bonds and dividends managing a growth stock portfolio. You have to line them up with the proper portfolio. What are the objectives? Pick the best manager for that portfolio. I love it. Active management. That's really what it's all about. I have a lot of discussions with people that are in mutual funds, and mutual funds historically, for the most part, are a little more of a passive management philosophy, where Gradient Investments actually takes on a true every single day in the trenches, active daily management. extremely powerful. Shows in the track record, shows in the growth from 200 million when you joined Gradient Investments to almost 7 billion of assets under management now. And then partnering the team. And I swear this to all the families I've ever served, we will find the best teams out there, the best fiduciary money managers to manage that money for the best outcomes of my families. That is the responsibility I have as a fiduciary advisor. And I've found Gradient Investments to be one of the best in their class. Now, in 22 years of being an advisor, and Mike, you probably know this, I've been with 4 other money managers throughout the years. They all run into dead ends or roadblocks or problems. I always come back to Gradient Investments, who I truly believe as an independent, active fiduciary money manager is hands down the best in the industry. So, Mike, your track record proves it. Thank you very much again for being a guest on the show.
Yeah, before we leave, Jason, I mean, I really think that's an important point. You're a fiduciary, we're a fiduciary. You're independent. You don't work for the local bank, or you're not your own investment company. You're a fiduciary, you're independent, which means you work for your clients. And as a fiduciary, you can select any money manager out there. We're very appreciative that you see the value that we create and we partner together. But I mean, in effect, what that means is that Gradient Investments works for Great Lakes, and Great Lakes works for their clients. So in effect, we work for your clients.
Absolutely. It's a great partnership. It's been a wonderful relationship. Thank you again.
You're welcome.
All right. Thanks, guys. And again, Jason, great get to have Michael Binger, the president of Gradient Investments, on the show today. A great discussion. Learned a lot. Looking ahead, looks great where we're at right now. So good show today. Before we go, I'm going to give away a few more copies of your book and let people know how they can set up a no charge, no obligation consultation. All they have to do is call 989-835-7203. That number again, 989-835-7203. And that does it for today's episode of Your Financial Empower Hour.
All right.